Apologies. I had to mute myself. I could hear myself in one of my on one of my screens. Okay, this time of the year is probably one of the most interesting from a trading perspective for us retail traders. It's obviously coming to the end of the chronological year, but it's also the end of the financial year, and it's also the end of the year for a lot of hedge funds, fund managers, big institutional traders, investors who have to kind of make reports and what have you. So you'll find their participation in the markets are kind of dying down a little bit. They kind of tend to withdraw completely once we've had the Fed, the FOMC, which is in about not next week, but I think it's the week after, where we have the final rate decision from the Federal Reserve. And the probability is there's a very high probability, according to the Fed Watch tool, that it's almost a 90% probability that there is going to be a cut in interest rates. Now, the Fed is actually quite interesting because Jay Powell's tenure as the chair comes to an end, and Donald Trump has already made known his preferred successor, who is what is known as a dove, a dovish Fed, a dovish head of the Fed has the view that keep interest rates low, cut, perhaps look into more QE, etc., etc. And it's the kind of stuff that the market likes. Now, against that, we have a market environment where economic news, fundamental news is not so good. There's still a lot of worry about inflation. We see the employment market. People are now losing jobs. So it's a very mixed picture. However, going back to what I said earlier, from a trading perspective, it can be a great opportunity for us. It's like a real traders market, a real traders environment. The only slight downside is that with the, if you like, the lower participation rate from the big institutions, from the big funds, liquidity is lower, and what that can result in more volatility in terms of price action. Does that invalidate? Does that mean we can't use VPA? No, not at all, because we always read volume price analysis in terms of the context of the session, i.e., what time of day or night, where depending on where you are actually trading, and it's always contextual. So where some instruments may have lower participation, that doesn't invalidate that relationship that is so key to understanding volume price analysis, and that is what is happening to the price action, and we look at the volume. Do those two elements, do those two indicators that we have on our chart, i.e. the candle, the price action, and the volume, are they in agreement or not? In other words, is the volume validating the price action that we see? And we have these, and if it isn't, we have what is called an anomaly. And for those of you who have the book, have read the book, not just the VPA book, the Forex book, the binary options book, the crypto book, it is the same principle. The price action and the volume, those are the only volume is the only indicator that tells us whether what we are seeing on our chart is a valid move or not. Now, in this session, you will see when we move to our charts that we use a number of indicators. I use some standard indicators. I have some moving averages. I sometimes use a Fibonacci. They're out there and I use them. And we also use our own proprietary ones that David and I have developed. And just to highlight, I'm going to share my screen very quickly because I just want to explain what it is that you are seeing on the chart. This is the chart of the MNQ, which is the E-mini for the futures, the NASDAQ futures, the NQ, and I have 3 time frames. I have the daily, I have a 5-minute chart here, and I have a minute chart, and I have an hourly chart. Now, on the daily chart, what you'll see is you'll see a number of lines. These are my own. I've drawn these manually. Because I need to know these key levels of support and resistance that are created by the price action. So it gives me a structure to my chart. It lets me see, are we in a congestion? Are we in a trend? Has that trend now reached an important resistance level that, as I said, I have drawn on the chart? And why do I think it's important? Because when I look back across to the left-hand side of the chart, I can see the price action has tested this region and it has reversed. Now, we're coming up to this level again. So clearly, that is going to be an important level that we need to watch. There's also quite an interesting sort of arcing pattern to the price action that we see at the moment. And I have the volume at the bottom. So what is on the chart combined with the volume will give me a pretty good indication of what is my expectation for what is going to happen today. This happens to be the MNQ. It could be anything. It could be a currency pair. It could be a stock. It could be a bond. It could be a commodity. It could be Bitcoin. And in fact, Bitcoin, it has been very interesting because it's had a strong sell-off, and now it has actually found some stability. And I'm hoping we've got some time in this session. We'll go and have a look at the daily chart, and I will highlight those points on the chart that would have helped you, given you a clue that possibly the downtrend was coming to an end. So that is my daily chart. On my minute chart, what I have here, I actually have the VWAP and I have the Camarilla level. And again, I have the price action and the volume. Just these 2 indicators that these are from quantum trading. Now, what I also see is what I can see on this chart, on this very fast chart. I see this level that has come down from the daily time frame. So this tells me that if this price action later on today in the US session comes anywhere near that, I know it is a significant level. And finally, on my hourly chart, I have a Camarilla level. And the reason I have the Camarilla is because the way this indicator works, the calculation for the Camarilla in all the time frames up to, but not including the hourly, the values are refreshed every day. Every time we have a close and we have a new session, we have fresh values. But on the hourly, right up to the daily, these values are there for the week. And again, talking about levels coming down from slower time frames, the 3rd level, very important level, I can see that it's tempted to come off the 2. If it gets to the 3, what are my expectations when it gets to the 3? The 3, my expectations is at least I can expect a pause. I'm not necessarily going to get a reversal, but I may get a pause. And then what happens next, as always, it's always VPA. VPA comes first. What is happening on the price action? What is the volume telling us? When is this at a key level? However you measure that level, whether it's a Fibonacci, whether it's a Camarilla, whether it's a manual line that you've drawn on a chart, whether it's a moving average, the VPA validates, the volume will validate whether we're going to get a reversal, a pullback, or in fact, we get a lot more volume coming in to actually break this level. Because the one thing I can guarantee is when price action comes to a key level or zone, call it whatever you like, you have to have good, strong volume supporting any move through. I don't know why these zones on the chart, these lines that we draw on the chart take on such huge significance. But there we are. There's another indicator on this chart, which is the VRSI. But I'm going to leave David to explain that to you. For more information about the individual indicators, it's Quantum Trading. This is the site. It's our site. We've developed these indicators over a period of time. We started for ourselves. We wanted indicators to help with support the VPA methodology. It just makes our life easier, and they're now available through Quantum Trading. Everything we say in these sessions from an educational perspective is now available. We have two main programs. One is dedicated to stocks, and there's also an options module in there as well. And we have the Forex program. But what I would like to say is, whatever you trade, whether it's a stock, a commodity, or whether you're a Forex trader, you have to understand that all the instruments, all the four capital markets in this business that we're in, they're all interrelated. So if you're a Forex trader, you really do have to understand the connection that has with the bond market. If you're a stock trader, you do have to perhaps appreciate that what is happening in the currency market may also impact the stock market, and the relationship that obviously the bond market has to everything. And also commodities. Commodities are priced in dollars. So if you like to trade gold, if you like to trade silver, any commodity, soft or the metals, understanding what is happening with the US dollar is, it's pretty important. And going back to the Forex market, what is happening with the Japanese yen? Because underneath the current slight complacency, was markets coming up to an all-time high, there are always things bubbling beneath the surface. And one of the things we have to be aware of is what is happening with Japan, the Bank of Japan, if they start raising interest rates. Because what not a lot of traders or investors appreciate is the funding that has come from the Japanese yen, that has provided the liquidity that has driven asset prices higher. So that's what we have. And finally, there is my site, where there's details on the book. And also David and I, we do take on a very, very small number of students that we mentor and tutor personally. And if you want more information on that, you can find that on at annacouling.com. And for coming along, for watching this recording, if you're interested in any of the products, that's the programs and the indicators. If you there is a code which is LS20, which will give you 20% on any of the products. Right, let's get back to what is actually happening in the markets at the moment. And as I said, this is how I set up my charts. This is the MNQ. As we're in the London session, let's have a quick look at what is happening in the Forex market. And for this, we like to have a quick look at the specialist tools that David and I use for Forex trading. We have our currency strength indicator, we have the array, we have the matrix, and we have the heat map. For intraday trading, for looking at for short-term trading, it's really starting with the currency strength indicator. I've got it on the hourly chart, and the first thing this tells me, the first thing that really jumps out of you, is obviously has been a strong move in the Aussie dollar. We can see here the line is moving. It's actually moving into an overbought situation. I'm just looking at an individual currency at the moment. What that also tells me is that, again, looking at this intermarket relationships, cross-market relationships that we have, is that when the Aussie is being bought, market sentiment is positive. And we've seen that reflected in the futures, which are, they have pulled back slightly, but they are generally sort of moving higher, moving to all-time highs. So the market gets a bit nervous. We call that, the wall of worry, as it were. But short term, it's been a good buy in the Aussie. What has been bought against? What has been sold? Well, we can see here the euro has been sold this morning. The yen is being sold, and we've even seen the British pound being sold. The commodity currencies, that's the Aussie, the New Zealand, and the Canadian, they do generally move in lockstep. The Canadian, possibly not so much in London. That tends to move more strongly once the American markets open. And certainly there's been a very strong move in the Aussie, and with all three moving higher, because the commodity is also used as kind of proxy for sentiment, in the sense that if commodity prices are moving higher, then and the commodity currencies are moving higher as well, sentiment tends to be positive. Now, your question you could ask me, saying, well, why is gold moving higher as well? Gold is very interesting. It's also reflective of, if you like, strains that we have in the financial system. So I say with commodities, in this case, I would say things like copper. I would say commodities that are consumed and used in when you have a lot of economic activity. So that's why we have the Aussie moving higher. Now, this is just individual. Now we want to try and gauge, which are the strongest Aussie pairs that have been moving higher. And for this, we can either use the array or we can use the matrix. And if I pull the matrix up, if I move back up to the hour on this one, so we're comparing like with like, and we can see here, we can see the Aussie yen, we can see the Canadian yen, we can see the New Zealand yen, and also the dollar yen. What that also tells us is that the yen has actually been sold quite heavily. And the nice thing about the matrix is these numbers, first of all, it makes our life easier because it points us in a potential trade in a pair. But what it also does, it tells us whether the strength of move in a particular currency, is it universal? And certainly in this case, let's move to the counter currency, which is the yen. We can see there's been some quite heavy selling of the yen against these particular currencies, the Aussie, the CAD, the New Zealand, and the dollar. In terms of the Aussie, yes, it's certainly at the top there. It certainly takes the two, in terms of strength, against the pounds being sold quite strongly, and the Aussie bought, and the euro has been sold, and the Aussie bought. So it kind of gives us a very clear picture of that strength that we could see on the hourly chart for the Aussie, where that strength is reflected and against which pair. So if you're looking for an opportunity, it's just such a great way, saving you so much time to, don't look at lots of 28 different charts. This will give you the pointer, and then you can go and explore any potential trading opportunities by looking at the charts and obviously looking at them in multiple timeframes. Now, I'm going to stop there. You've had enough hearing my voice. I'm going to pass over to David, and while we're doing that, we'll look in more detail on some of the charts. And just as a reminder, in case I didn't make this clear earlier, LS20 will give you a discount on everything, on all our products. That's the programs, that's the stock program and 20%. Forest program, and any of the indicators, and that's 20% off the prices, the list prices on the site. So let me just pass over to David. I will stop sharing my screen.